Can I start with Alpha? And Lunsemfwa is not only the oldest IPP in the region, but I believe you were the first private sector member of SAPP. Could you just talk to us a little bit about the genesis of energy trading in the region and the role of private sector players?
Yeah, thank you very much. So I'll handle that from a hydro perspective. So I think in terms of generators and traders, if you look at Zambia, we started from a single buyer model where the market was that you could only sell power to the national utility, and Zambia historically has had independent operators on the network. So prior to independence, there was Congo Rhodesia Power. Before ZESCO was formed, then there was ZESCO, then there was Ghana Division, which became CEC, and then Lunsemfwa Hydro was the first IPP in Zambia. So historically, you've had several players in Zambia, and I think power trading now finds a very natural fit for Zambia, or a fertile ground, because there's already experience in terms of management of different players in one market. Now, in terms of hydro and traders, I think what I've seen is that when we had the single buyer model, if it doesn't pay, then you are stuck. You just have to keep on chasing for the invoices. But now that the market has been opened up, you have traders that have the ability to pay in advance. So what they've done is to bring liquidity into the market, and so generators can now focus on their core business of generation. Okay, that's one thing they've brought. The other thing is, if you look at the single buyer model, all that we had was a long-term contracts with a fixed tariff there that is not responsive to the market. Whatever happens to the market, there's no way you can reopen the PPA because you've already agreed on the tariff. Okay? But now there's a situation where in the open market regime, you have traders that are flexible in terms of pricing, flexible in terms of tenure of the business. And that I think is good for the generators. And this is what I think we encourage development of more generation. Yeah, so that's what I would say about that. Thank you.
Thank you. If we could turn to the traders, so we have 3 trading firms here on the panel, which interestingly must be one of the largest number operating in any market apart from South Africa. So I'd like to start maybe with Nsofwa. What makes Zambia attractive as a trader? Why do you think so many traders have started here as opposed to most other markets in SAPP?
Okay, thanks, Jonathan. So for the Zambian environment, I think the trading players and participation of the traders on the market has been greatly propelled, I would say maybe in 2 factors. One, of course, is the open access regulation. Zambia has in place the open access regulation, which allows different players, say large consumers, to source from different sources other than the national utility. So these can be IPPs, independent power traders, and vice versa. So traders can sell to an array of off-takers. So the open access regulation has been, I think, greatly pushed to an agenda that has really allowed private player participation in what was historically, like Alpha mentioned, a single buyer model, and to have a utility that is vertically integrated across the market, and this being opened up. So that's on one side. I think the second side is the situation that the nation is currently in and the region at large. We are in an energy deficit. So this placed a great constraint on the national utility. Zambia is hydro-dominated, and the drought greatly affected and suppressed the generation capacity that we have in country. So this placed a great strain on the utility in terms of supply to their usual customers, and particularly large energy consumers. And this was compounded also by the fact that the utility was not in a great financial position to be able to source power elsewhere, aside from their generation. So traders played a big part in stepping in and bridging this gap and filling the gap, being able to aggregate and source across the region and allow the industries that actually propel our economy to continue operation and to secure industries, operations, jobs, and so on. Of course, on one side, it may come as a price to the energy consumers, as when you're importing power, this comes probably at a premium price. But I think this has greatly allowed the traders to get more and more entrenched into the market and play this pivotal and, I could say, collaborative role with the utility. Not so much in a competition aspect, but a collaborative role. With traders coming in and being able to supply to mines, manufacturing industries that operate 24/7, industries that require firm, secure supply 24 hours of a day, 7 days a week. The utility is able to focus on other areas of our nation and sector, the social areas, and to be able to supply power there. So we see it as a balancing fact, or a balancing effect on either side. As traders, we come in and we provide that support and stability that the large consumer needs. And ZESCO, of course, apart from focusing on supplying the other users, are actually providing a service to us traders through the wheeling services, banking services, balancing services, and so on. Yeah.
Thank you. Emmanuel, if I can come to you and just dive a little bit deeper into the different functions a trader can play. I mean, I know you're also involved in transmission project development. Can you talk a little bit more about business models and those different functions?
I'll just pick up from what Nsofwa was mentioning. In terms of trading, obviously we sit at the center. We are sort of an aggregator. On one hand, we are guaranteeing the supplier that we will have the ability to pick up the power come rain, come sunshine, because we have the banking agreements with the utilities such as ZESCO. And yet on the other, we are also guaranteeing the client that we will be able to provide that power as an agreement cost effectively, okay? And providing this power, we'll be able to, we have agreements such as balancing agreements with the likes of ZESCO as a utility. Excuse me. And yes, so as a trader, we're sitting at the center. At the same time, we also see the opportunity to bring in private capital into the electricity industry. For a long time, the electricity industry in the region is dependent on government and utilities to provide the capital for infrastructure expansion. With the coming in of traders, and I think it was alluded to by my colleague on the left, what's happening now is that we are bringing in innovative ways of providing guarantees, aside from your usual standby letter of credit. You know, traders are now looking at prepayments as a form of guarantee. Traders now have on the backside, supported by their clients with deep pockets, are able to leverage on the balance sheets of the clients to be able to push IPP projects forward. So yes, there's a lot at play. It's, as you said, I think Zambia is in a very, very positive position to push trading forward. And Nsofwa mentioned the supply challenge that we have. This has also provided or presented opportunities. So we see that trading model actually evolving over time.
Monie, if I can come to you and look not just at Zambia, obviously there's a lot of Zambian participants on the panel, but how the regional markets are unfolding and how traders can play a role in cross-border supply as well.
Well, quite honestly, SAPP is probably the most advanced of the regional markets. Whereas in West Africa, where we have the West African Power Pool, WAP, a lot of the regulations have been put into place, a lot of the structures have been established, but there is no real trading happening with private sector involvement. They're basically legacy bilateral agreements between utilities, and I think there's still a question of political will. Are governments willing to allow the private sector to engage in regional trading? Whereas I've noticed in SAPP, it's quite more advanced because there's actual trading happening. And for Petrodex, we are trading cross-border. We trade between Mozambique, Zambia, and DRC. And we now intend early next year to begin as well in Zimbabwe. So I think the South African market is quite advanced, and I think it will benefit from the trade that private sector is evolving, because we're increasing the volume of trade in terms of cross-border trading. And by increasing the trade, there's more revenue coming to transmission service operators. That revenue can be reinvested into the regional transmission backbone, building capacity, putting in more investment, and further enhancing trade across the sub-region. Because, you know, as we look at the sub-region, we think, oh, it's a question of a supply gap. Well, sometimes we need to also realize that in addressing the supply gap, you also have to look at how you're going to move electrons from one place to another. And so I think there needs to be a parallel development in terms of both what we do in increasing generation as well as the transmission infrastructure for that.
Fedde, if I could come to you next. I mean, FMO operates in multiple developing markets around the world. How does this market compare with other places where you lend?
I have to agree with Monie. I think Zambia is one of the most advanced countries in terms of the open market regime, and SAPP is definitely indeed one of the better power pools, even globally, I would say. So that also has led to FMO financing the first real trader PPA in the form of Ilute, which is a 25 megawatt power plant here in Zambia. I think we as DFIs are very traditionally, of course, very focused on the utility-backed PPAs with sovereign guarantees, but these PPAs are becoming more and more scarce or even impossible to obtain. So I think we also have to turn around our thinking and see how we can still make it work. And actually, the trader model unlocks real bankability for a lot of projects, because you don't have to deal with the single off-taker who might or might not pay. You have options, right? You can have a PPA, but even if that PPA in the end doesn't work out, or your counterpart for whatever reason also doesn't pay, there's always other options, right? And I think this is very valuable. There are, of course, other sources of risk, right? And one of the most important sources of risk, new sources of risk, is price risk. As was already mentioned earlier, the old PPAs are fixed price or maybe some escalation, but now you have to deal with periods where there might be prices of 20 cents or higher, or maybe even zero, right, in Europe, what we've seen. So this is very important to manage and to mitigate, and I think we've structured it in Ilute in a way that the repayment schedule is also a bit more flexible than what we are used to seeing. So these kind of solutions are critical if you want to unlock all this projects.
Sherrill, if I could come to you, and if you wouldn't mind unpacking that from a commercial lender's point of view, both how you would look at a a pure trader-backed project like Alute, but also just how you see the role of traders affecting projects that have PPAs, whether it's utilities or CNI.
Perfect, thanks. So from a Standard Bank, Stanbic point of view, we've financed over 15 generation projects selling to traders in the last 12 to 18 months. And actually our first trading project was with Anthem. So they can talk about that just now. But you've really got to have a different mindset when you look at a trader project. So the first thing is when you look at a utility back, you're used to having all the risks allocated and someone taking that risk. But when you move into the private sector transactions, you have to see it a little bit differently. And so from a trader point of view, it's very much a different mindset. The first thing is a trader is not going to have an asset-heavy balance sheet usually. And so where their value is the customers and the contracts that they have on the back end, which are flexible. So a key point there is to understand how we can get comfortable with that balance sheet risk. And so one of the things that has emerged in the trader space is the payment security structure. So usually there's a quite high level of payment security that they offer to enhance the bankability. And I mean, a good comparison is in South Africa, you actually have a higher level of payment security than you do in a Zambian trader. Now, why would that be? At the moment in South Africa, you don't have a fallback market as in SAPP. So most of the South African traders do not have access into SAPP yet, but in Zambia and Zimbabwe, if you're dealing with a trader here, they have a fallback market into SAPP, and that's part of the reason why we can be a bit more flexible on our side on the level of payment security that you would need. You need to look at the unique circumstances of the deal, and that's one of the unique things about traders. It's not a one-size-fits-all. Also, every trader is different. Not all of them are created equal. They've got different business models behind them, different types of clients that they're targeting, and so you really have to understand their business model to understand the risk so that you can ensure that the PPA adequately deals with those risks. So those are some of the key things in how we evaluate it. And so we're happy to bank transactions where you have the trader as the sole off-taker. It can also be useful to look at transactions where you've got multiple types of off-takers. So Alute is I guess more of a SAPP through a trader, which has very interesting structures as well. And then you also have the structures, for example, where the trader is actually signing up with bilaterals on a shorter term basis and managing their book in that way rather than being a recourse into SAPP. And so those are some of the things you really need to consider in these transactions and how you structure them.
Thank you. James, you are a developer and you're investing equity. So I suppose I'd just start with, how does your investment strategy change because traders exist?
Similarly to the points Sherrill raised, we've just got to get used to the adjustment and the framework around the PPA and security. I think we've been able to work off good foundations in the REAP PPAs in South Africa and then adjust those for the dynamism that traders bring. We've been very supportive of the growth in that market. We love what we're seeing. It offers us a wider array of customers, more access to offtake, and it's allowed us to, I think, as an industry and certainly as our business, focus on our comparative advantage, which is remaining in our lane on being more specialized in development, delivery, generation, operations, really getting the most out of the asset, and developing ourselves as wholesalers while traders develop a more retail market. It means we don't have to have a massive sales team. We don't have to worry as much about billing and reconciliation, and that allows traders to really develop those skills and offer them as a product, not only in a bilateral way, but in time also to utilities in the form of ancillary services. So it's made us excited, if that's an investment strategy, open-minded, but still, it's still within reason. We're applying caution where we think it's required. I think there is a risk that we'll run away with ourselves a little bit. I think we're counting on a market that we're still developing, whilst investing and banking on it, and that calls for some prudence. Our business is funded by long-term open-ended funds with pension fund and insurance policy-linked backing, and so we've got to keep those clients in mind. If everyone pushes too hard on innovative structures, it's going to be the IPP and the lender that's sitting with the risk after the trader model has just been optimized too much.
Okay, so I'll pick up on that theme, and this is a question for anyone on the panel. What are the biggest risks you see in the development of trading? And that can be either for your own institution or for the market as a whole. Who wants to go first?
So one of the things that's become apparent with the supply shortage in Zambia is the spotlight on transmission. By transmission, I mean transmission bottlenecks. Okay, so obviously as traders, we are in the business of ensuring that an electron produced at a plant in the Karoo or somewhere in Northern Cape arrives at a mine or primary school in the northern of Zambia. So for that job to get done, that electron needs to move cost effectively, because there's a point around cost. So with that in mind, it's with the supply shortage in Zambia, it's become apparent that the solution is not only sitting with generation. Transmission needs to receive the same attention. And with the activity that trading has brought into the region, you can actually see the traders jostling with utilities for capacity on the transmission networks. So I think that it's going to be important to elevate or prioritize transmission as an aspect to grow the energy sector, not only in Zambia, but in the region.
Alpha.
Yeah, thank you very much. So you see the trading in Zambia is being enabled by regulation as well as the Electricity Act. So we have those laws in place. But then if you see the way it has evolved, the traders are participating only on the healthy industrial markets. They are not participating on the domestic low tariff level market. Now, public sentiment can change policy. Public sentiment can actually reverse the same policies that are enabling trading. Okay? So what you see now is that traders are playing in the industry, but they are not playing on the domestic consumers, and the domestic consumers may not see the relevance of the traders. Now, there are two challenges there. The first challenge is that you have a problem of the tariff structure. It's not cost reflective. So a private sector may not go into there. But then, even if you adjust the tariff, the circuit configuration in the distribution network is not ready for trading. You cannot segregate this neighbor from the other neighbor. We've had a situation where a client is willing to pay a high price, but you cannot connect that client because there is no way of segregating that client from his neighbor. So I think that to improve the public sentiment, there is need to invest in infrastructure at domestic level. We need intelligent meters, we need monitoring systems, and we need circuits that you are able to segregate. At the moment now, you can only segregate at transmission level and medium voltage. So that's, for me, is a risk to the developments that we've achieved in trading. Thank you.
Thank you. Who else would like to? Sherrill.
Thanks. So from a trader point of view, one of the key risks that we consider, so the trader will sign a long-term PPA with the IPP, but in the back end, they've got shorter-term PPAs with their end customers. So the risk that we most worry about from a lending point of view is the ability to roll over and renew those PPAs, and at what price. So in some ways, transmission is definitely critical. We shouldn't just forget about transmission when we look at generation, but at the same time, transmission constraints can actually protect at least the IPP side of things, because it prevents too much supply getting onto the market too quickly, which means prices will remain, they're not going to fall through the floor when there's too much supply and not enough demand. I mean, that's an example of what's happened in Europe, is there's potentially too much supply and not enough demand, and so you get negative prices and you get issues around prices and viability of those generators. So transmission is critical and we must definitely invest in it, but it can also be a little bit of an incubator for a new industry because it just prevents mass deployment. On the public sentiment, I agree that's very important, and that's why from a Standard Bank and Stanbic point of view, a lot of the transactions that we're looking at, we're trying to figure out how to crowd in the public sector. And it's something that we're very focused on, because we don't want private sector can often sort itself out. You know, they've got the means to do it, etc., and it's public sector that lags. And it's very important that energy trading and the open access shouldn't be seen to just be benefiting the private sector and the residents of Zambia and the small businesses of Zambia and Zimbabwe are the ones that then suffer, because the traders are not interested usually in providing power to them. That is the utilities role. So what we're looking to do on a lot of the transactions is crowd in the public sector, crowd in the utility. Obviously there's credit risk around that, but we've got innovative structures that we look at that help mitigate that risk around using some of this new revenue they get from traders to credit enhance their purchase of power, or to build transmission lines, which is also important so that they can be the new generation. So I think those are all very good points and risks that we actually need to look at. It's not just the trader risks, it's also the public sentiment, the political risk around, does this make sense for the country and not just for the private sector.
Thank you. Monie.
Yeah. Thank you. To Alpha point, I just want to say that Petrodex has a subsidiary that we created, Zim Power, and we are investing in low voltage infrastructure and connecting customers. Right now we're at the industrial level with industrial customers, but we do intend to expand that. So we are already in that space. Regarding the point that Sherrill raised, I think that's also a risk the other way around with these supply agreements that we have, power supply agreements. As a trader, we need flexibility because we need to adapt to changes in the market. So if you tie yourself into a long-term arrangement and there are significant shifts and changes in the market, you find yourself not able to be as adaptable as you need to be to survive in the market. So I can understand on one hand where there is a need for long-term PPAs, but we also need the flexibility on our end to be able to adapt to the market. There can be significant shifts in prices, in even the type of clients you have. Your client portfolio might change over the next 2 years. There might be a whole change in the supply in terms of generation mix and all of that. So we see that as important, and that's a risk for us, because when we go to lenders, they're not comfortable with that business model. They want to see more long-term arrangements, but we're not a generator, so we cannot provide that kind of an arrangement for them. So we do have a financing risk from the other perspective of what Sherrill said. Thank you.
Can we just move our focus a little bit away from Zambia now? This is a Zimbabwe-Zambia event, and we're also operating in the context of SAPP. So I'd be keen to hear from panel members how they see things unfolding in Zimbabwe and potentially in other SAPP countries where they operate.
I'll take Zimbabwe since it's another key market for Standard Bank. So Zimbabwe is also definitely a very busy market. It's got the same ingredients that we see from a Zambia side, so open access, power shortage, etc. There is a few more complexities around Zimbabwe. So as the panelists said earlier, Zambia has had IPPs for a very long time, and so there was a lot of track record, and so it was easier to adopt from a Zambia point of view. And also, in my view, part of the differential is also Zambia is connected into DRC and copper, cobalt, critical minerals, a lot of opportunity cost for mines not to have sufficient power. So you do see the same in Zimbabwe, but there it's not as pressing because the commodities are not as hot as copper and cobalt, for example. But we are definitely seeing a revolution come through for Zimbabwe. We've got a lot of pipeline there, and we're very excited about what we can look to achieve there. And I think for the region, we don't want one country to prosper. We want all of them. And so it's important to also take learnings from one country and move them to another. So I mean, for us as a group, a lot of our learning started in South Africa, and now we've moved those into Zambia, and the intention is to move them into Zimbabwe and other regional markets as well, to ensure that the lessons learned, the structures that are in place, can benefit the region as a whole.
Thanks. Monie.
Yeah, Petrodex has already applied for a trading license in Zimbabwe. But I think what's important is the interconnection between Zambia and Zimbabwe, which for us provides an opportunity for a bigger market that we can then leverage our trade in that area. So I see it in terms of the interconnection and expanding the size of the market.
What other markets? And I mean, not just, I guess, the domestic markets, but maybe their interconnections. Nsofwa, I mean, how do you see the ZTK connection into Tanzania affecting things?
I think starting from a Zambia perspective, so I think in Zambia, we are strategically located. The centralized position, the resources as well, actually allows us to become a power hub. So it places us in a very opportunistic position. So, and this is interconnecting excess markets, such as Tanzania and the Eastern African Power Pool, and also to deficit markets, our proximity to DRC and so on. So I think as Kanona, I think I did mention that we have a regional play. So we have explored these other neighboring markets, and Tanzania is one of them. And we see it very key to get the Tanzania-Zambia interconnector in place, particularly to tap into that market. So Tanzania has some excess. The Eastern African Power Pool, maybe not as matured as Southern African Power Pool, but there's also great opportunity in East Africa. And if the Southern African Power Pool is then able to tap into that market, it opens up a lot of opportunity, not just for Zambia, but also the other countries interconnected in the SAPP grid. And Zimbabwe market being one of them, that is also experiencing a deficit, just like Zambia. I mean, in Zimbabwe, there are a number of traders also in the industry at play. Maybe the open access regime is not at the level that Zambia is at, but definitely has potential to get there. And Zimbabwe itself as a country, I think has great potential in additional generation, not just from hydros, I mean thermal plants, I think there's great potential there as well. So if that can be tapped into and all these interconnectors are in place, and like one of the other panelists mentioned, transmission constraints are very, if I can say, problematic or a challenge that we're facing. And there's huge opportunity there to expand on transmission interconnection between these excess markets, deficit markets. And I think private player participation can actually really propel getting those in place. We've had transmission line projects that have been in the pipeline for years, but have not been actualized. And in one side, you have markets, say like our markets here, Zambia and the DRC market, demand is growing on a daily basis. We are basically chasing demand. Even outside of the deficit, I think we would still be in a position where we are chasing demand because of the many mining expansions and so on that are currently taking place and projected to take place in the near future. So I think it's definitely important the opportunity is there, and it's important for us to then tap into this and be able to interconnect the markets. And I think it was Emmanuel who mentioned to say that as traders, we actually can provide or play a role in providing bankability against these transmission infrastructures based off the back of credible off-takers. So you're no longer putting up infrastructure, maybe it's just say for the sake of putting up infrastructure, but you're putting up infrastructure that can actually be paid back over quite a short period of time, backed against credible off-takers that the traders provide. Thank you.
Yeah, Emmanuel.
Just expanding on the same points. Npower's original business model was to mop up all the excess capacity in Zambia and sell that to the DRC mining market. And a couple of years into operation, that immediately changed because of the scenario that Zambia is experiencing now. So we had to adapt in the sense that we had to reach out in the region, signing bilateral contracts as well as playing the market on the SAPP. So with that, what this transition tells us is that, look, first of all, Zambia is in a shortfall right now from a supply point of view, but the DRC has persistently been in a supply shortage. Studies have shown that currently, just in the mining region of the Katanga, the shortage sits in excess of 1,500 megawatts. So when we speak about the ZTK, those are sort of opportunities that we see to integrate the region. There's 2,000 megawatts sitting in Tanzania. That's not going anywhere. On the other hand, you have another 2 gigawatts sitting in Angola, but there's no interconnectivity. So if you look at the region and the market, I think that whilst we have embarked aggressively on generation projects, again, we need to look at transmission, resolving the transmission constraint to be able to move these electrons. Thank you.
So allowing for these transmission constraints, but there's still going to be, I think we all agree, increased trading between countries in the region. Talk about currency for a second. I mean, Zambia's, the wholesale market's in dollars. A number of other players are in dollars, but the South African market, which is still the biggest generation market, is in rands, and some other governments in the region have ambitions to grow the role of local currency in wholesale power markets and have tariffs in local currency. How do people see this market integration unfolding? Will it be a dollar market? Will it be a rand market? Will it be a blend? James?
For us, one of the attractive elements of coming into Zambia and the like, or SAPP, is the fact that it would be dollar-based PPAs. I mean, we see that as a diversification away from rand PPAs, which obviously dominate our portfolio currently. So we would certainly hope it remains that way. We've seen the challenges that come with currency convertibility issues in local currencies and other markets in the region. Obviously the kwacha is strong, and that we could open our minds to, but it's still volatile, and we'd be going from one volatile currency, which is our own at home, to another one here. So I think there's a lot of attractiveness about the dollar PPAs, and would hope it stays that way.
Alpha.
Yeah, it's also possible to have a duo, because if you look at SAPP from 1995 to date, you can choose what currency to put your bid in. You can put it in rand or you can put it in dollar. I haven't understood this mathematics. There are times when some people switch to rand depending on the exchange rate. Sometimes they switch to dollar. So it is possible also that the market could evolve into a dual currency, as it's been done before on the SAPP platform.
I think one of the key things in choice of currency is who your off-taker is. So here we're talking traders, which is mainly supplying mines, who are dollar earners, and so their dollars should be the choice of currency for sure. And I agree, I wouldn't support Quadra PPA against mines, especially since they're dollar earners. However, when you move to more supplying smaller industry, domestic users, etc., then you do need to consider local currency. So what's critical is who your buyer is and where they're earning their revenue. So someone like Zesco, they earn revenues in dollars and in local currency. So technically, some of the projects that they procure should be local currency, because otherwise they are taking too much risk around buying power in dollars, but selling part of that power in kwacha. I mean, key risk in Africa is T's and C risk. So we see transfer and convertibility as a critical risk from an African context. So where your off-taker is a dollar earner, it's great, it should be in dollars, but where it's not, it's a big issue that we see crop up. So it can crop up in two ways. So if there's a mismatch, either the IPP, the generator, is taking the risk, or the off-taker is taking the risk. So where the generator is taking the risk, what we see is that they are unable sometimes to access enough US dollar to pay for their debt and their equity return, and equity returns then suffer greatly. There's a lot of markets in Africa where unfortunately this has happened. And then the other approach is if you're putting that risk on the utility, so utility is getting most of their revenue in local currency, but they are now paying dollars. What we see there is exchange rate depreciation. Suddenly they can't afford the power, and then you have payment issues. So it's very important, in my view, that you should understand where they're getting their revenues from and try and match it. Saying that, equity does want dollar returns. So I'm not necessarily promoting that we need to look at 100% local currency PPAs, because then for developing markets you may struggle to get international experienced equity involved, but you can structure it as indicated on a dual currency basis, so to reduce the risk for either the IPP and or the utility, depending on their revenue source.
Fedde, if I could come to you, and if I can ask you a question, not just on behalf of FMO, but maybe give me your view of what the wider DFI sector thinks. So how do you think DFIs see the development of markets, not just as risk mitigants, but is that something that the DFI sector can invest more in, right? So a couple of your peers have invested in Africa Green Co already, but traditionally DFIs wanted to fund hard assets. So do you think there's a role for them to play more in infrastructure, traders?
I mean, definitely. The question is how much is needed for traders, right? I think they don't need huge balance sheets. I think that balance sheets are more indeed on the off-takers and the generation side. So I see the role for DFIs more, honestly, in those two components. Greenco or any other traders, I think it's more an equity play as well, rather than debt, at least at this stage. So I don't think in the very short term we will be funding the pure, let's say, the trading balance sheets. But generation, definitely, as I said in the beginning as well, it is an important risk mitigant. We can also look at different currencies, potentially. I mean, the big benefit of trading on SAPP, of course, is that it's all prepaid and it's dollar, right? So the kind of payment risk is mitigated. And with local currency, I think it's a different kind of play. The interest rates will be significantly higher. So that's not always seen as something which is viable. But definitely, I expect in the coming 3-4 years that also the DFIs will catch up and will fund more generation with trader or aggregator offtake, as well as maybe the portfolio platforms themselves.
Good. Thank you. We're getting towards the end of the panel, so I'd like to open it up to questions from the floor. There's a silence. It either means the lunch was very heavy or we've said everything already, and which is well done. Right, while you're all thinking about it, I do want some questions. I'm going to ask one more, which again is a general question to the panel. Get your crystal ball out. Where do you think the energy trading markets are going to be in 5 years from now? I'd like to have a go at that one.
Well, Zambia has an ambition to produce 3 million tons of copper by 2031. That cannot be done without energy. Our current installed capacity is just under 4,000 megawatts. I see there's some miners in the audience, and they'll tell you that to produce a ton of copper, you probably need, in a range, dependent on the ore grade and the technology, you need something like 4 to 6 megawatt hours. How do you interpret that? We will need in excess of 1,500 megawatts to come online in the next 5 years to be able to achieve the 3 million tons per annum. Now, can we do it by generation alone in Zambia? I don't know, maybe the timeline is too tight. Hence the conversation about transmission and supply. So I think that in 5 years' time, to achieve that target, it'll have to be all hands on deck, especially with the electricity challenge we're facing now. So yes, that's my 2 cents.
Monie?
As traders, we're always chasing electrons, and we need reliable supply. And for us, it's not about a crystal ball. We're planning towards investing in generation assets, renewables. So we see traders, I mean, ideally we don't want to invest in generation assets, but if we cannot secure electrons in open market, there isn't enough investment in generation, then we have to also start thinking about making those investments. So at Petrodex, we are investing in renewables so that, and it's purely from a trading angle and no other reason, to facilitate our trade that we can have a reliable supply for trade. So I see traders diversifying and going into generation as sort of supplement what they can source out there in the market. And I think by going into renewables, it also contributes towards the diversity of the generation mix. So we can source from hydro to solar and gas, depending on what's available. So I see that as a natural way of adjusting to the demand, rather than hoping and wishing that there'll be more investments. And most of the investments that have come from that we have now in generation are quite old. They're legacy generation assets, and climate change is affecting especially the hydro sources quite significantly. And I don't know what the appetite is going to be to continue to put more public investment in those areas.
I mean, on that front, if we look around the world at other markets, to the best of my knowledge, there aren't that many pure power traders around. There are either power traders who also have physical assets, or there is power trading done by commodities traders who have a bunch of other more liquid commodities and also do power, and therefore they have balance sheet and scale. So I guess I am going to probe a bit more to other panel members of how do we see the market in Zambia and SAPP unfolding in that regard?
For me, I think the first thing I would say is that the market is definitely not going back to what we were used to seeing. So there's been a shift, and I think this shift will begin to take a certain form or mold. So I think maybe that's a reality that we have to accept and deal with. Like has been said, I think the demand is destined to grow, and we need the infrastructure to support that. So I think apart from just the trading, buying and selling of electrons that traders do, it's definitely important for traders to have a hand in this growth, not just in the trading aspect, but also in the growth in the relevant infrastructure that we need, whether it's additional generation, whether it's additional transmission capacity, and maybe even whether it's reinforcement of existing assets. So there's definitely a need. If we need to get to a place quickly, 3 million tons of copper as the target for the country, we actually do need the private player participation. And this can actually take a form in the traders actually participating in that. And it can be in pure participation of the assets themselves, or even just gathering private financing and private capital. So I think in 5 years' time, we will see a lot more participation from the traders in trying to get to a resolve that of this the demand needs that the country actually needs.
Thanks, Nsofwa. Alpha.
So if you see the trading that is happening now, for those of us that are members of SAPP, it's like we are running two parallel markets. You have the SAPP market, and then you have bilaterals with the traders or off-takers. Now, sometimes these two markets can be counterproductive to the other. Now, what you see on the SAPP market is transparency, especially on how to access the wheeling path. What you see on the bilaterals, if you ask traders here or people here how much they pay wheeling charge, whether in Zimbabwe, EDM or elsewhere, each one has a different figure. Each one has his own. Now, when you open a market, you must also bring transparency. So we have transmission bottlenecks, but there's no clear transparency on how we are arriving at bilateral wheeling charges. And so that complicates the business model for the transmission network. So going forward in 5 years, I think that we need to sort out this access to the transmission networks. It has to be transparent so that people can compete. And I think that the SAPP method of a postage stamp is the best, in my view. Others could have other reasons. It may not be economical, but I think that whatever value it can be, if it's transparent, then people can compete on the actual product. So we need to sort this out. Otherwise, one market could eat the other. The other thing we need to sort out is public sentiment. If we are trading, and then the people in the houses don't see the benefit of that, there's potential for policy reversals. So what we should do, first, on one hand, you have these customers, the demand is there, but there's no buying power because the electricity is expensive, the production costs are expensive. So what we can do is we could blend the power, let's say hydro and solar, to achieve a much lower tariff, so that the public can begin to afford, but also maybe that can provide an incentive to invest in infrastructure, because we don't have infrastructure to actually trade downstream. And that's not just in Zambia, South Africa, Zimbabwe, it's the same. So we need to work towards that. Otherwise, if we don't, you're going to have regional sentiment that may be negative to the whole business. Thank you.
Monie.
Yeah, I just wanted to respond to something Alpha is saying. He's, I guess, assuming that what we're doing as traders doesn't have an economic return. And I don't agree with that. And I think there's definitely an economic return to power trading. We import power into Zambia, which contributes to the supply of electricity in the country. So there's definitely a benefit. So yes, there may be public concern, public opinion, but I don't think that alone will drive public policy. I think governments will probably look at a bigger level in terms of what are the economic returns of these activities as well. So I just wanted to make that point. Thank you.
Yeah, if I could respond to that. You see, so there is benefit to trading. As we've said, trading has brought liquidity into the business. But the only people seeing the difference as at now, it's actually the industry or people that are in the industry. Okay? So if you look at our parliaments, they don't discuss what we discuss here as technocrats. They just discuss what they hear from the public. So if the public are having load shedding for 16 hours a day, that's the discussion they have. And you are not going to tell them that, look, because of trading now, you are able to buy power. Somebody can import power for you. You can't. Even if you have money to import power for the domestic markets, the circuits are not in a way that you can give him the power.
But
Yeah.
my point is, by virtue of what we are doing, we are providing 160 megawatt into the market here. So just imagine if we were to take 160 megawatt out of the current supply, that the impact that would have.
Good. Traders, I'm speaking on behalf of the masses and the audience. People don't like you. They are saying that you reap where you didn't sow. They say all you have are laptops, you have no assets, and you are making more money than the generators. If someone has not told you that, they've told me. So I think your greatest danger is actually that sentiment. If you are just going to stay with laptops and you have no assets, physical assets in the 5-10 years, you'll be history. People don't like the fact that you are making more margins than the producers, and that you are not making life particularly easy even for the consumers. That your margins are too high, and because of these, if you like, the opaque nature of some of the transactions. So that is your greatest risk in the business. It's only me who can tell you this.
That's an interesting version. But I wanted to, I think, add on to something that you talked about, the opaque transactions. I think also Alpha mentioned it. Currently in this country, there has been the open access regime, which has been put on the table. But along the open access regime, there are certain things that must also be satisfied. The independency of the market, the independency of the system operator, that needs to be addressed. Without that, those opaque corners will still be there. So there's need, therefore, to move ahead and have the independent system marketer and system operator, and not necessarily the power utility. Now, I do also have some knowledge that there is some work going on by somebody to actually come up with all the regulatory framework that is going to manage the open access regime. So as we sit now, the open access regime, yes, exists, but the regulations to actually manage it are not yet in place. There has to be an independent system marketer and operator of the system. That itself will open up all these transactions of wheeling charges, and even to the funders and lenders, they'll be able to see through from the long-term power purchase agreement between the trader and the IPP to the short-term power supply agreement between the trader and the customer, whoever it is, whether it be a mine or a domestic customer. Because I think, as Alpha said, once we do have regeneration or revitalization of the distribution networks so that you can actually have 7 customers in a row supplied by one line, but they have different suppliers from different traders. That is possible. It has happened before. We are not reinventing the wheel. It's just to ensure that the system is able to handle that. So in terms of the future, where do we see ourselves as a country, Zambia specifically, in the next 5 years? Once the ISMO, or Independent System Market Operator, is in place, a lot of things will come out clean. Currently, we are running, I think, before the chick is hatched, we're actually trying to benefit from it. I think that's what I can say.
Any other questions from the floor? Questions or comments? None? All right, well, if there's no more, then I will say traders do bring efficiency, because I think we're finishing a few minutes early. They've got through things so fast. I'll make my own prediction. In 5 years' time, if we do a new edition of the Power Project Finance Handbook, we will definitely need a new chapter or two on trading. I cannot tell you what it's going to say, and I also can't tell you whether the US government's going to be funding it or not, but we will write a new chapter anyway. Thank you very much, panelists, for a great discussion. A round of applause.